One second, sir.
Happy Tuesday evening to all of you. Welcome to today's CPE meeting. We have with us Bhargava Srinivas, who will take us through startup benefits under various laws. I'm happy to introduce Bhargava Srinivas. He is a chartered accountant and a managing partner of a leading firm. His firm offers professional services in the wide areas of assurance and taxation, mergers and acquisitions, valuations. The firm, its associates and affiliates comprises of qualified and experienced chartered accountants and certified public accountants. Firm's clientele is spread across major metropolitan cities like Bengaluru, Chennai, Mumbai, and tier 2 cities like Mysuru, Mangalore, Hubli, and Vellore. The firm has developed deep network among corporates in major metropolitan cities in Bengaluru, Chennai, Mumbai, and Hyderabad, and also have got a reputation of ethical practices across the corporate arena. The firm's functional expertise are in financial and accounting advisory services, corporate compliance, financial reporting and taxation services, IFRS, Ind AS, MIS, vast experience in transaction advisory services, forensic audit, group consolidations, transfer pricing agreements for MNCs and MNAs, and transaction planning. Firm's clientele comprises of international media and advertisement group, Fortune 500 companies, international marine and shipping companies, international travel agents, technology-based, fintech, MFI and NBFCs, healthcare, automobiles, real estate and plotted developments, banking, education, biotechnology, elevators and escalators, shipping, banking technology and domain exports. With this brief, I present before you Bhargava Srinivas, who will take us through startup benefits under various laws. Over to you, sir.
Thank you, Raman sir, for a very nice introduction. A very good evening to all of you. To start with, I would like to start sharing my screen first. Right. Okay. Now, first of all, am I audible?
Visible and screen is also visible, sir. You can continue.
I'm audible, right?
Yes, you're audible, sir, and visible, sir.
Thank you.
Screen is also visible.
Thank you so much. Now, startup benefits under various laws. Now, we are trying to create a vast picture of what all the benefits startups has got under various laws. Now, just a minute.
Sir, is there any issue, sir?
1 second.
Okay.
Not audible, friend.
Okay, sorry for the small interruption. To continue, we will start understanding up to what kind of benefits a startup can actually take, and let us create an awareness as to what all provisions within the scope of the law by various governments, be it state government, be it central government, and various district authorities, which give us the platform for startups to really perform very well. Now, to understand, let's start. Now, who is this startup? The word startup, where do we actually see them? Now, I have just listed down basically of what are the stages the startups are usually in. Now, the whole startup idea of the concept was, taken to a next level in the year 2016. Now, I'll come back to why 2016 plays a very important role, but I would like to start with what exactly is a startup basically. Now let's say you have a concept, you have an idea. So you will start a entrepreneur who is very ambitious, starts thinking about an idea, has got a very technology based idea or a biotechnology, any sort of idea which he or she thinks that it is possible to enterprise. Now that is when the idea is conceptualized. Now, when the idea is conceptualized, what is the importance we're giving and why we are talking, why we are making so much noise, and startup entire thing has become a trending word. Now, let's understand first thing. Now, before, let's say a decade before or 15 years back, if somebody had an idea to start with, what are the chances that they would definitely make it to a large business organization? Now, the odds of becoming a large business empire 15 years back or becoming today, if you actually compare, today has got higher chances. Just because there is a lot of support from the government side, be it state government, be it central government. Now let us understand what stages do we classify startups as. The first stage we classify startups as a pre-funding stage. Now this is basically a stage where idea is conceptualized. Now once the idea is conceptualized, the startups can bootstrap it. Now the word bootstrap is a very trending word when it comes to startups. Now, what is bootstrapping? Bootstrapping is starting something in your own money. For example, the word bootstrap comes in the means you wear your own shoes. Simple. So that in the sense you take up your own money, your own savings, maybe from your brother, from your sister, from your close friends, relatives, from your parents, from your spouses. You take up your own money, pull in your own money, work confidently on your idea. That's when the pre-funding stage starts. Now, what happens in the pre-funding stage is usually entrepreneurs, what we call them, are only one person or two persons maximum, or you call them founders or somebody who's a hardly 2 to 3 people. Now, 2 to 3 people start off, use their own money, they develop the idea, they try to speak about this idea at various places. Once the idea clicks, now they look for a fund where they can start with business operations. Now, pre-funding stage is also called the stage where the bootstrap. That means that they pull in their funds and start working on the idea. For example, if it is a technology based thing, they start to make a prototype of what they have conceptualized. If it's a food industry, they try to research on various machineries or make it in their own way and try to sell it, get the market review. So they're trying to ideate their concept in a very clear manner. That is pre-funding stage. Now, once they feel that their product, their technology, or their service is going to, they have the confidence that it is going to be very large, then they need funds to start off their idea to do it in a mass scale or a large scale. Now, that is where we call it as a seed funding stage. Now, here, the most important issue of the seed funding stage is about POC, that is proof of the concept. Now, they started with a clear set of ideas. They made a prototype. Now, once the prototype is done, they would like to push it to the market. Now, once they want to push it to the market, the time between ideating the concept and pushing it to the market, that is the time they need a set of funds and large amount of support from the society. That is the seed funding stage, where we call funding seed. Seed is where they germinate the seed. So that means the seed is what they will start to germinate the entire concept. Now seed, this is where they try to raise money called a seed money or seed fund to prove their concept in the market. Now, like that, they go on with Series A, B, C, mezzanine funding, IPO funding, and FPO. let us not look about startup and equate it with funding directly. Let us. I'm just trying to put the classification in such a way that these are the stages startups run through. Let's look at what is that benefits we have. Now, one of the most important benefits given by the government of India and associated with the federal structure is MSME certification. I'm sure most of us know about this. Is micro, small, medium scale enterprise certification. Now, what's MSME all about? So earlier we had what is called as Udyog Aadhar. Now it is called as Udyam Aadhar. Now it is classified into three categories, that is micro scale enterprises, small scale enterprises, medium scale enterprises. Let us understand the categories. Now, so this is how the government with this latest notification has got this, what is the classification for micro, small and medium enterprises. So when do we classify something as micro scale? That is less than 1 CR turnover and less than 1 CR investment and less than 5 crore turnover. In the similar manner, less than small scale classification is less than 10 crore investment and less than 50 crore turnover. Medium scale classification less than 50 crore investment and 250 crore. Now, if you remember our previous slide, we spoke about pre-funding stage and seed funding stage. In the micro classification, it is in below the pre-funding stage. That is, it is either in the pre-funding stage or the seed funding stage. So once starts, I mean, new enterprises start getting traction, start building traction, they will move from pre-funding to micro to small and medium, become a large-scale enterprise. Now, we wanted to tell our community as to what kind of supports as chartered accountants can serve for startups. For example, financial management planning for financial policy determination. For example, they can list out, they can do a pure costing study. They can do a pure market research and analysis. They can actually speak about how inventory can be managed by maybe integrating technology. For example, we have seen so many chartered accountants giving advice on hub and spoke model. Now, these are the kind of things: working capital management, preparing project reports and feasibility studies, helping promoters to pitch for more funds. They need a definite a plan, definite project report, which is realistic in nature, able to determine what sort of cash flows at what point of time, and determining whether the enterprise, the idea is really profitable. These kind of support, see, chartered accountants can definitely add a lot of value for startups. There are today a lot of founders who are chartered accountants themselves, and I mean, you just can imagine the kind of value addition they can end up giving. So I have classified, I mean, various benefits under three important categories. Okay. First is our Income Tax Act. Second is our GST. Third is our various other miscellaneous government schemes. Now, why would I tell you this? Is because these are the three laws which impact startup on a larger scale. So let's look at one by one. So let's look at benefits under Income Tax Act. Now, if a startup is a freshly registered company after 1/3/2016, directly 25% is the tax.
Bhargava sir, sorry to
Any
sorry to
question?
interrupt. Slide is in the first page itself, sir. It's not moving, not without question. The slide is not moving actually. It seems to be passed
Oh, slide.
because we are seeing the first page only. Can you check, is it passed?
Can you share the slides?
Do you want me to share the slide?
Yeah, you share.
No, sir. You need to stop share it and reshare it again, sir.
Stop sharing.
Okay, it seems you're paused actually. Can you and you can start sharing it again, and then yeah, it's in the startup benefits and income tax act. Yeah.
Okay. Okay.
Now it's
Now,
visible.
okay. Okay. Now, to just come back. So, one of the important reduced rate of tax given for domestic company. Now, what's a domestic company? All of us know something which is incorporated, registered in India, and if it is started after 1/3/2016, the corporate tax rate is 25% flat. That means actual rate is 30%. Now, the 5% discount is given on the domestic rate. Now, let's go to the next one, which is most important. Now, this is one of the most competitive rates in the entire world. 115 BAA is a very, very important section. It says 22% tax rate for domestic companies. Let me tell you, income, this is, I think, the lowest income tax rates in the world, especially when you compare to developing or developed countries. Let's take developed countries. Minimum tax rate is nothing less than 30 to 40%. No company, be it US, UK, any European countries, nobody has a tax rate less than 30 to 40%. Be it the best developed countries, they have nothing less than 40%. And there are European countries which charge minimum 51% tax rate. And India is giving tax rate and 22%. What do you think? If this is not the best thing to be here, if this is not the best time to be here, when is the best time? I'll explain why this is the lowest rate. Hong Kong has got a corporate tax rate of 16%. Singapore has a corporate tax rate of 17%. Now, if you can say that this is 22 and that is 16 and 17, but if somebody has to transfer their royalty, dividend, or any sort of benefits after investing there, they have to make a withholding tax of 5%. That is 17 plus 5 comes back to 22. Now, Hong Kong and Singapore are the two developed or developing countries, emerging markets, where the tax rate is on par with what India is. Now, let's understand we are talking about domestic companies. Let's say manufacturing companies. Now, manufacturing companies cannot be established in a place like Singapore or Hong Kong because it has got different kind of problems. They will not find the kind of labor support what we have. We have kind of population dividend we have. They cannot find that because cost of their civilization. I mean, Singaporean civilization or Hong Kong place where if you have to live and sustain is very very high. That is the biggest advantage what India has. So 22% tax rate for domestic companies is one of the most competitive tax regimes by the government of India. Now, what are the conditions we talk about? Non-claiming of additional depreciation. These are all Section 32. If I'm talking to chartered accountants here, I think not claiming the depreciation is Section 32A, 1C, and all. Now, the question arises that does 115 JB does not apply. One of the best part is I think this is section 5A of 115 GB talks out that speaks clearly about 115 BAA that is not applicable to this 115 GB does not apply to 115 BAA. Now this is one of the most benefits I think we being chartered accountants have to make sure that we communicate this kind of schemes to the public and society at large. Let's go to the next one. Now, this is 15% tax rate for new domestic manufacturing companies. Now, this is one of the most competitive tax rate encouraging manufacturing, setting up of new manufacturing facilities. Now, 15% I think is the lowest in the world. I told you, I spoke to you earlier that 16% is the corporate tax rate in Hong Kong, 17 is Singapore. You can tell me there are zero tax rates in Middle East and various nations, but they are not completely non-tax havens. So let's leave the tax havens, or let's leave those countries who do not comply with FATCA regulations. I am talking about those countries which are very, very serious in terms of the corporate tax collection, encouragement of business entrepreneurship. 15% is the lowest, I mean the lowest in the world. So this being the case, I'm sure the benefit of being a startup, if you apply for startup recognition after 1/4/2020, then 15% is the tax rate for new domestic manufacturing companies. Now, in this case, 115 JB also does not apply to this section. If I am speaking to chartered accountants here, 115 JB does not apply to 115 BAB. That's it. That means 15% plus maximum surcharge of 14.4%. That is 15.6% is the effective tax rate for new domestic manufacturing companies. Let's go. I mean, I'm sure most of us know all these things, but I would like to just brush a few important slides that how there are already some presumptive income schemes which will enable a startup or individual person who's not a private limited company, who's not a he's a HUF or a partnership firms are eligible to take such kind of things. That is 44AD presumptive section, presumptive income section, 44AE, and this is one of the important things what the government also comes out with. Now 44AA, if I'm speaking to chartered accountants here, 44AA, just a minute. Okay, 44AA is one of the sections which will talk about non-maintenance of books of accounts. Correct? Excuse me. Okay, non-maintenance of books of accounts. Am I audible? Excuse me, am I audible? Okay, just to continue, non-requirement of maintenance of books of account if your total income is less than 1,20,000, your sales is less than 10 lakh rupees INR. Now, just let's understand how this is linked with startups. If I'm talking about a startup which is in pre-funding stage or seed funding stage, where they don't have a single penny of revenue, I'm sure they do not have. If somebody is still in the mode of an entrepreneur or promoter mode, who has completely not ideated his concept, is not he's not basically he has not completed his POC, that's proof of concept. Then this is one of the most important requirements you have to communicate to those startups or promoters of these startups, saying this is one of the supports given under Income Tax Act. Go to the next one, 44. This is for professionals. And okay. Now, one of the most important things I want to speak to you is about angel tax exemptions. Now, Section 56 was amended in 2016 to speak about exemptions on primary acquisitions. Now, what is this primary acquisition all about? Primary acquisition is more to do with allotment of shares from shares issued by the company. What is secondary issue? Secondary issue is transfer of shares between the existing shareholders. Now, what is this angel tax exemption all about? Now, why, as a startup or as an MSME, how does this become really important? Now, Section 56 speaks about if consideration paid by an investor to a company at a price which is far exceeding the book value, that is adjusted book value, then the premium received by the company is exempted from tax. Now, how does this really impact us? How does this really have an impact on startups? Now, entire concept of startups is all about expansion of business in a very rapid mode. Let me give you an example why angel tax exemption becomes one of the more core amendments that can support startups. People spoke about in 2001 to 2010 that if a company like Infosys or a Wipro or a TCS or a Cognizant has to be created, one of the best top Nifty 50 companies I'm talking about, It took almost 30 years, that is 3 decades. Now, instead, if you want to have a mass and rapid expansion of business activity in a lesser period of time, you need funds. One. Second thing, what you need is you basically the network of entrepreneurs, network of high individuals, high net worth individuals, network of mentors, network of consultants, and network of experts in the industry. Now, let's say we have let's assume today that what we call Silicon City, Bangalore. Let's say we have an entrepreneur who has got a very fantastic technology based idea. Now, what he wants to prove that from pre-funding to at least an IPO level. Let's list out what all things are important. First things, what is important is he has to prove his concept. Now, second thing is he needs funds, he needs some mentors, he needs some consultants, he needs some high net worth individuals who will believe in his idea. He needs existing businessmen who can take him to high places where he can get them more business. He should be able to be connected with the best in the industry. Now, all these should happen in a very, very short span of time. Now, there's no free lunch anywhere in this earth. Now, if somebody has to, let's say, HNI has to invest or believe in the concept of a person, he would ask for remuneration, which I'm sure the new startups cannot offer. So, in exchange for remuneration, they would offer him some equity. Now, let's say somebody wants to offer equity worth, say, 5 crores worth, but the startup would not have a single penny of cash, just the idea which can become a bigger business. Now, in such a case, the value of business on that point of time is what is determined. And of course, the balance sheet will have zero or negative results, but you are valuing your business at a very large value. The value is based on the belief that the business is going to become extremely large. Now, that is when corresponding equity is given away to consultants, HNIs, businessmen who are with a large network, and a lot of existing business experts, consultants, and more number of people. Now, if somebody has to give so that means instead of giving 5 crores in cash, somebody is giving equity, which startup says it is worth 5 crores. That means does it really mean that they have received 5 crores as premium? So that means the consideration paid for the shares is greater than the fair market value, right? Now this is where we are talking about how angel tax exemption really comes into the play. So startups will value their business not on current value, on a future value. So what is future value? It's like they will try to bet on the future profits. Now, once they bet on the future profits, they try to say, okay, 5 years down the lane, what will be my value? And they try to bring that to the current value. That means they will discount it according to inflation, discount it according to various other factors, and they will bring it to current value. And that is the value per share is determined, and that's how they collect money from investors. Now, once they collect, let's say a balance sheet which has literally negative balance sheet, negative net asset, gets say 10 crores tomorrow on valuation. That means total amount of tax payable, if this angel tax exemption was not there, means it will be 10 crores into around 40% effective tax rate. With your surcharge and income tax rate 30%, surcharge at 10%, and assessed at 4%. Effectively, it will be nothing less than around 35 to 40%. Now, this angel tax exemption facilitates startups to get that saving of 3 crores when they get 10 crores, and it'll assure two people. One, the startup is sure of getting the money. The investor is sure that his money does not go to tax, but gets used in the business. So that is how angel tax exemption becomes a game changer in the Indian market. So very simple conditions have been put up in the law. One is you have to get a TPIIT exemption certificate. I'm sure chartered accountants can provide that service very easily. And your share capital and securities premium together should be less than 25 crores, which is of course valid. So this is the kind of benefit given the angel tax exemption. Uh, this is the kind of game changer is the amendment given the law. So this is the kind of benefit given the income tax law. So let's go to the next. Okay, there are various other laws which talk about how benefits are given. Let's understand that there are few very small benefits, of course, given the GST law as well. Let's look at the okay. Now, when I say benefits under GST law, I do not see it beyond pre-funding and seed funding stage, because I'm sure once they are in Series A funding stage, like what we spoke in the first slide. Let me just go back to that slide. So, if somebody is in Series A, until only these three stages, they'll have GST benefits. So they did not register to the GST law until 40 lakhs. And if the service turnover, they did not register until 20 lakhs. Now, even after registering, if they want to be inside GST law, they have composition schemes, which is 1% for traders and manufacturers and 6% for services. And return filing is reduced to quarterly basis. Now, this is one of the other benefits of the GST. Now, with respect to GST law, we have got very less benefits. So let's look at the other benefits under various other laws. Now, startup benefits, collateral-free loans from banks. Now, most of you might think that it is still a very difficult task to get a loan from banks for a startup. We as a firm have helped a large number of startups in getting loans worth 10 lakhs to 50 lakhs from usually State Bank of India or Canara Bank. I'll tell you how. Now, if the startup or the person, promoter or founder has got a brilliant idea, a viable idea, you have to prepare a project report which is very professionally prepared. And I think you have the formats readily available on the net. You have to go to the district industrial center and put an application for something called as Mudra loans. And I'm going to speak about CGTME scheme a little later. Mudra loans. Now, the government authority will assess whether this project is viable and fund such schemes, and it is working. So most of the audience I have heard think that these benefits like Mudra scheme or CGTME scheme does not work. But I'm sorry, but these schemes have been working, and I want we as chartered accountants or non-chartered accountants to explore these features. I'm sure we will definitely have people with positive output on these things, because we have personally helped a lot of startups in getting this kind of loans. Now, what is collateral-free loans? So usually bankers work on providing loans only on collateral basis. If the promoter or the founder does not have any collateral to offer, he should not be denied of any loan. So that being the objective. So CGTMSE scheme, that is Credit Guarantee Fund Trust for Micro and Small Enterprises, small enterprises have been brought. Now, this scheme is sponsored by SIDBI, that is the Small Industries Development Board of India. Now, what happens in this scheme is that the government is going to charge a small 1.5% on the total value of the fund, the loan given to the startup, as a fees for offering collateral. And usually collaterals are offered, these kind of loans are offered around 9 to 10%. So this being the case, So definitely collateral-free loan from banks are definitely available. The previous series of funds we spoke about in the first stage, first slide, is all about non-repayable fund. But now we are speaking about repayable fund. So this is collateral-free loan from banks on the CGTMSE scheme. Let's go to the next one. So, like we understood that let's say we have an entrepreneur from Bangalore or Chennai who's got a brilliant idea, who's got a brilliant code with him, brilliant technology with him. He has got a prototype of it. Now he has to register as a patent because nobody else should copy it. Correct? Now once he registered something which is nobody should copy it, he needs to get a patent registration. Now there is once you take a registration as MSME, the benefit here is that you get a 50% discount on the application cost of patent registration. That is given, that is subsidy given by Government of India if you are MSME registered. So this is the case. This is one of the very important subsidies given to startups. Now, very similar OD interest rate exemption is also given to MSMEs or startups, whatever you can call. Here, 1% over the OD, there's a discount of 1% on the overdraft facility. Now, if you are a startup, if you are registered under MSME, then your overdraft facility from the bank will get a 1% discount over the other normal bank rates. So if normal customers, I mean business are getting a 10%, startup with registered with MSME will get 1% discount on the as subsidy over others. This is the kind of benefit given to startups. Now, I would like to speak what sort of benefits that MSME Act really provides. Now, I have heard from a lot of startups that they're certainly able to find a customer who understands their idea and it is useful to them. Problem comes when they are not able to receive the payment from the customer. Maybe they would have had the first or second customer where they're trying to prove their idea, or one customer they're able to prove the idea. Next, they find a large customer with one or two founders trying to sell their service, trying to sell their goods. But if their working capital gets stuck, I think it's a full stop for them. It's an absolute full stop for them. Now, what happens if it's a full stop for them? So, if a startup is registered as an MSME and sells goods or services to a buyer, the buyer must pay or on or before agreed date within 15 days of accepting goods and services from an MSME. Now, if the buyer delays payment for more than 45 days, the startup, if it has registered in the MSME scheme, can approach the MSME authority for receiving the payment faster. Now, the buyer will be paid. Buyer must have to pay, and MSME authority will come in between as an arbitrator to make sure you receive the payments. Now, this is one of the important benefits given under MSME scheme. What we have done for our startups, I'll give you an example. We have, whenever they sign a revenue contract or sales contract with the customer, we will notify that they are an MSME registered startup and their payment policy is less than 7 days. And if we will also mention that what are the consequences if this startup has been delayed payment more than 7 days. I'm sure if a small startup is trying to pay to a very big customer, large customers or large companies are already aware that if it's an MSME, it has to be paid within the specified time. Otherwise, MSME authorities can pull them up for making the payment with 3 times the interest stated in RBI. Now, this is the kind of benefit is there. So we have executed such things, and we have seen how arbitration has happened, and startups have received money in these cases, and this is really working. So going back, all of you, if you're chartered accountants, please make sure you change the policy, you change the data policy, you change the customer's revenue policy, sales policy by making a contract which clearly says if they're registered in MSME, the time limit to pay, due date to pay the payment is less than 7 days, and also mention what are the consequences if the due date is not adhered to. This is the kind of support I'm sure as chartered accountants we can give. If I'm speaking to audience who are non-chartered accountants, I'm sure this should really help them. MSME protection against payments authority, MSME authorities protection against payments it's a wonderful scheme which is actually working. We have gone through and we have experienced, and you should should make use of it. If not for them, who else can make use of them? So do not forget to use MSME as a tool for getting the protection against your payments. So very similarly, like patent registration, government also can reimburse expenses that were spent for ISO certification. This is available. Please do make use of it. Okay. Now there are startups who would like to get overseas business. Now there is special consideration on international trade fairs. Now how does this happen? Let me explain. Under the International Cooperation Scheme, financial assistance is provided on reimbursement basis. Now, how does it work? Now, you should be a recognized startup under the Startup India scheme. You should be a registered under the MSME scheme. You should have your Udyam Aadhaar number. Now, in such a case, you want to put your stall to exhibit your service somewhere in the international exhibition, trade fairs, somebody holding international conferences. Let's say you want to put your stall to display your technology somewhere in the US or Europe where the international conference is happening. You can submit an application to Ministry of Commerce, which will reimburse the cost of putting up this putting up your display in various international conferences. That being the case, you should definitely please visit Ministry of Commerce portal. It is very informative. You should make sure to use this special consideration purely only given for MSMEs only, not for anybody else. Not for a classification which is a large company, they have to spend on themselves, no reimbursement given to them. It is for MSMEs. That means startups registered and recognized as MSME, that is Udyam Aadhaar certificate. Yes, for those people who have Udyam Aadhaar certificate, they will be given reimbursement on actual basis. So please do make use of this. Now, how many of you would have actually gone through what is government e-marketplace? Government e-marketplace is a place where government auctions offered specifically to MSME. That means if government is purchasing something, it is offered only for MSMEs. So there's a website called GEM. I'm sure here usually products and services are purchased by the government, and tenders are for governments basically. So government tenders particularly and specifically offered only for MSMEs. So there is a very large amount of transactions happening, and it's a very successful model given by the government of India. So startups who want to maybe have services which government wants definitely should visit this place and visit this marketplace. It's an online marketplace. Please register yourself, and sure startups will have a lot of benefits to come through this marketplace. So this is very similar. This is 1% overall exemption on interest only. Now, this is one of the schemes. I think there are a lot of schemes which people do not know about it. This scheme intends to help MSMEs upgrade the technology by giving a 15% capital subsidy for purchase of plant and machinery. So, if you are an MSME, you will get maximum of 15 lakhs. That means if your machinery you're purchasing, you're trying to upgrade your technology. Let's say you're trying to purchase new technologies worth 1 crore maximum. 15 lakhs is given as your subsidy. for purchase of land, provided you fall into the classification of MSME. So these are the kind of benefits which a startup classified as MSME has got. So these are, I have noted down all schemes which we have definitely used it, definitely been able to work on it. So this PowerPoint presentation, I'm sure, is with everybody, and definitely we can open the session for queries. Thank you.
Sir, are we done with the presentation? Hello.
Hello. Yes.
Sir, are we done with the presentation, sir?
Yes.
So we'll take up the questions from the audience. I'll try to unmute everyone. So those who have questions, they can unmute and speak. In the meanwhile, what are the questions that came up in the chat box or question box? I'll compile it and
Okay.
chat in the stream. Audience, those who want to post any questions, they can unmute themselves and they can post the question to them.
Can you hear me?
Yes,
Bhargava?
please. Yes.
Yeah. I just want to know whether the sweat equity for the technical know-how development of the startup company, whether it is taxable in the hands of the shareholder or the director of the company.
Can you repeat your question? I'm sorry, I'm missing it.
See, the company, the startup company has got funds through the promoters. That is one way of bringing funds, right?
Okay.
The other one is that they have spent money on the technical know-how.
Technical know-how. Okay.
Yeah. Can we create sweat equity in the form of shares for consideration other than cash, and is it still taxable in the hands of the promoters as perks or whatever, salaries?
This is, I think, a very specific question. If you have know-how which you're saying promoters have worked on.
Yeah.
Okay, so you want to issue shares in the form of salaries?
In sweat equity. Sweat
equity.
Correct.
Now let us understand if that is the case, if the valuation, what is the first question here you have to ask is what is the value of the know-how?
Correct.
Is the value of know-how giving a so depending on that you will be able to issue yes, and it still will not be taxable.
It is not taxable in the hands of the employee or the promoter?
No.
Okay. In case they transfer the shares issued under sweat equity, then it will be taxed as capital gains, right?
No, I think this is a very specific question. We need to look into the case and advise the case-to-case basis. But
Okay. Okay, I'll write.
Questions that came up.
You can definitely write it to me. I would like to connect with you and give you a proper solution to this.
Yeah, absolutely. Thank you.
You're welcome.
I'm sharing my screen, sir. So these are the questions that came up in the chat of questions.
Okay, I'll read the question. It is very difficult to get startup recognition to avail income tax benefit, as statistics show that not even 1% of startup could get the exemption. The process to prove the requirements of concerned company members is still as beneficial provision with forum. Okay, the first question here talks about difficult to get the startup recognition certificate. I have for last 6 years from 2016 not even failed in getting the startup recognition for any one company. I do not know what is the bad experience, but if there is any specific bad experience, please let me know. This looks like a very generic question. So there is no way I have seen a rejection which is unreasonable. Any small rejections here and there, if you reapply it, I have always received it. There is no, I have not got a rejection till date at all. So there should be some specific problem. Okay. So if there's a generic opinion, I would like to pass. But if there's any specific problem, please you can post it. I would like to answer. Going to the next question, for angel tax exemption, we need to get a valuation done. So only registrar valuation, or should we also get merchant banker valuation certificate? Now, the question has got the answer. You have to get both registered valuers valuation and the merchant bankers valuation certificate. You have to get both, because I think section 56 of Income Tax Act is very clear. It speaks about merchant bankers valuation certificate. Why should you get a registered valuers valuation certificate? Is because under Companies Act it makes it mandatory. Whom to approach for trade fair benefits, which are what are export benefits available. Now, trade fair benefits, you have to contact Ministry of Commerce. They also post which fair is going on, and no, the above question, whom to approach for trade fair benefits, what are the export benefits available. Now they ask you, there is a port, the Ministry of Commerce portal makes it very clear in terms of what trade fairs are available, what kind of exhibitions, displays, stalls you can put up, and what kind of reimbursement is available. So it just takes few hours to explore Ministry of Commerce website. It is very simple and easily available. What are the export benefits available? Now, export benefits is something very, you have duty scripts, you have SIS scheme, MIS scheme, so many schemes, but this is a little complicated. You need to consult your chartered accountant whom you are consulting to get the export benefits for startups. How to register as a startup in DPIIT? It's not DPIIT, it is DPIIT. So this is a very simple process. Go to the Startup India website. You will know startupindia.gov.in. You will get all the answers. How can we get subsidy, which was mentioned for MSME? I think we have mentioned subsidy for patent registration. There is subsidy for trademark registration. There is subsidy for ISO registration. If you put your MSME number there, that is Udyam Aadhaar number there, automatically 50% discount will be posted. Section 80 IAC of income tax was not discussed. Now this is a part of Startup India exemption certificates. Definitely 80 IAC is one of those exemptions for three continuous years. Definitely yes, you're right. Please explain DPIIT registration process of startup. Please go to startupindia.gov.in. It is very simple. As steps are there. Can you scroll down, please? Can you please scroll down? Whether non-maintenance of books, if sales and income does this apply to professionals also? See, the word professionals is defined in section 44AA. If you want to take this non-maintenance of books with respect to professionals, you have to apply section 44 ADA, which purely talks about only declaration of sales and 50% as the income. But as professionals, maintaining books of accounts is mandatory under section 44 AA. So that being the case, it is mandatory for professionals to maintain books of accounts. Please share some information of Startup India Accelerator Program, amount of capital to be received and scheme at large. Now, this Startup India Accelerator Program is always depends on. Usually it is available with the incubators and accelerators. Now, what happens here is that the disbursement of Startup India seed funds happens through these accelerators and incubators. One second. Can I see the question list?
1 minute.
Okay. to understand the Startup India's accelerated program. So what happens? The disbursement of the Startup India funds, whatever is there from the government side, be it all those schemes. There's something called Nidhi Prayas Fund. There's something called SIS, SI Startup India Seed Fund. There's so many funds which Government of India gives for startups. Now all these are disbursed through recognized accelerators and recognized incubators. Now, any startup who has to get the funding from Government of India has to register itself from accelerator, has to get a incubator, basically has to register with an incubator which is recognized by Government of India, through which they will get the funds. So that's how, and it's very simple. Except proving your viability of the concept, except proving your POC, there is no other. And I have personally been associated with a lot of incubator and accelerators. It is very easy, and I have seen dispersals of funds happening in less than 45 days. Once your startup is shortlisted by a very good level of juries. So the next one, at the time of allotment, sweat equity.
Sir, can you give some example of? Can you hear me, sir? Can you give some example on, like, what is an incubator and accelerator? Just what is the institution or something like that, so it becomes easier for us to appreciate.
Sure. See, what happens is incubator is basically a model, is an entity where, for example, let's take few colleges. If you take colleges, there are few engineering colleges, there are few management colleges where incubator facility. The word incubator comes from basically if a nascent baby is born before 9 months. So that is it's basically a medical term. So the technology which is used to support a baby which is prematurely born is what incubator was used for. Now the same word is used here for startups to support those startups which require such facilities. Now, what has government done basically is it has recognized a lot of colleges. For example, I have seen JSS colleges. I have seen so many colleges in Bangalore and Chennai which has got a incubator. Now, what is an incubator here? So, let's say a few students who are very interested in starting something, they end up with their idea, and they need to be, their idea has to be germinated. Now, if the idea has to be germinated, there needs to be a separate entrepreneurship cell kind of thing which will progress their idea. Now, what this entrepreneurship cell or incubators do is get a recognition from Government of India. So they hire mentors, they hire business experts, industry experts, and help the startups. Now, those in the incubators and accelerators who are already recognized by Government of India are these people who dole out all these kind of funds. So that is the startup accelerator program. Am I clear?
Yes,
No,
sir, one more
sir,
question.
I just need a little. Go ahead, sir.
Sir, is the funds received under startup accelerator program, is it a grant or a loan, or do they get the equity? That means, do the startups give a portion of their shares?
Okay. Now, decision to make it a grant or equity or a debt depends on the accelerator. Government of India has got broad guidelines. There are few disbursement, few schemes which will make it completely grants, which is non-returnable. However, it is very controlled by the accelerator. That means it is literally handheld by the accelerator. There will be less freedom to spend money if it's a grant. If it is a loan or a debt, I mean loan, debt, equity, usually what it is usually convertible preference shares or convertible debentures is issued to the startup. So if the startup, they give you some benchmarks saying if you achieve some what you call benchmarks step by step, they will try to take equity from you at a pre-decided value. So this is how it usually broadly works. This is a Government of India broad scheme. But each incubator has its own specific scheme, which is designed on a broad scheme, not Government of India scheme. Am I clear?
Yes, sir. Thank you.
I have a follow-up question on this one. When you
Please.
say, how do I know the list of institutions that has been registered with the Startup Accelerator program? Like, how do I know so that I can understand like whether I need to approach the institute or not?
Okay, now
Is there
what
a
you have to
website where we can refer?
in the Startup India website, that is the Government of India website, you have those list of incubator and accelerators which are recognized by Government of India. Now, once if you want to apply for any fund, you can go and select the fund. Then it will ask you choose an incubator or choose an accelerator. There you can choose which incubator or accelerator you want. For example, if you're living in Bangalore, you can choose few. It's something called as GINSERV is there. If you're in Chennai, you can choose something called Harvard accelerators there. There's so many accelerator incubators are there. It is not hard to find them. The only thing is they should be recognized by Government of India. This is there on the Government of Startup India website.
Okay, I have a couple of more questions.
Please.
I know, yeah, the one is about by what time you need to do the MSME registration for the entity, because we are coming across many people who did not know that this existed, but they want to get the benefit of MSME registration because they are started after 1/4/2020. Is there a time limit to do the registration under the MSME?
MSME registration is a very different thing than Income Tax Act, first of all.
Okay.
And it's very different than Startup India schemes. MSME is a I mean classification recognition. It has got different kind of benefits. It does not give you benefits under income tax law. It only gives you benefit under various government. There are so many state government schemes which only recognize MSME. For example, government e-marketplace. Okay, about it is only going to give opportunities for MSMEs. So that is the case. So MSME is purely on different. It's another separate vertical than Startup India, but there are so many mutual benefits in both.
Okay. Thank you. So that I can actually register, right? If I miss the bus in the first few months of my incorporation,
No bus for MSME. I'm telling you, there's no missing the bus at all.
Okay. But in terms of the startup itself, I have not involved in actually doing the registration by my hand, but I keep hearing from my office that MSME at least they'll go through, but they're not able to register themselves for the startup. So
no, it's a
if
very
I don't
simple
register,
registration. If you're able to do it, just approach your chartered accountant. I'm sure he should be able to help you.
okay. And the second thing I actually have as a follow-up question is only if you register as a startup, you will get all the benefits that you listed under 115 115 EAD and also
BAB, yes, yes.
Okay. Thank you, sir. Thank you. And is there a time limit that if I registered myself in 2021, I can still go ahead now and register myself under the Startup India scheme?
See, Startup India. Just to tell you, Startup India scheme is first Government of India benefits. Income tax is a different vertical. Startup India scheme is a different vertical. MSME is a different vertical.
I fully understand and appreciate, sir, but the fact is I have to register my organization under these two different things in order to get different benefits because the company may need the benefits, right?
So best thing is register under Startup India, MSME, both. You have a private limited company?
Okay. Yeah, I am like one of our client who's approached is a private limited company, but the earlier person has not done these registrations for them. So we are just almost 1 year past the registration. So
don't worry. Apply Startup India, apply MSME, close.
Okay. Thank you very much.
Yes. Going to the next one. At the time of allotment, sweat equity shares. I think we've answered this question, no? Is registered valuation required for issuing shares in at a premium and to avail? Yes, it is important. Otherwise, you cannot get the angel tax exemption. Impossible. An MSME in media industry is denied loan by most of the banks. Any suggestions? I think we have to look into this specific case as to why it is. I don't know for what reason it is rejected. I mean, denied loans in most of the banks. Any suggestion? No, this depends on case-to-case basis. I need to know the case exactly as to what is the problem with the bank, why they have rejected. after DPIT, why do we still need approval from IT department for availing exemption benefits? Is DPIT? See, this is you're asking a technical question. Somebody I don't know. What I would like to tell you is that DPIT is a recognition by Startup India scheme. IT department is income tax department. MSME is different. All are different verticals and are working for different objectives. So you need to get different certificates from each of them. If you become eligible, please get certificates. So whether it is right or wrong, I am not the right person to answer.
Hi, sir. This is Abhilash.
I'm sorry.
Hello. Yeah, this is Abhilash
Yes,
speaking. Can you hear me? Yeah.
I can't hear you.
It's a nice yeah.
I
It's a
can't
nice
hear you.
presentation.
Great.
So actually, oh, can you hear me now?
Can you type
Can
your
you hear me now?
question?
Can you hear us?
Yes.
Yeah, I can.
Thanks. Yeah, I have a question. This is Vinay Kumar. You mentioned about grants, right? So if we are a recipient of a grant as a startup under any of the maybe incubator or even a private grant as such, right? Need not be under India, can be even a private grant. How does the income and GST both treat the grant? I mean, what is the right treatment for the grant? Is it to be considered as outright?
Very technical question, and you're asking a very technical question. That depends on what kind of grant given to what point of time, how the dispersal happens, and a lot of things. So this is purely technical question. Please write to me. Let me understand the specific case and what kind of grant you have given. Then I'll be able to answer this question.
There are two questions in chat box.
Hello. Hello.
So
Hello.
while
Mr.
attending,
Bhargava.
I think the last one, no? While
Hello.
attending tenders.
Register value. There is one question from Sankaramurthy, sir. Yes, sir.
Hello.
Tell me, sir. Hello, sir.
Yeah. See, this ATIIC benefit, no, you need to discuss a little bit because no, it is the general problem from the clients. Not even 1% of the application is approved by the joint committee to review the petition, this application.
Okay.
And you know, from the date of recognition of the startup, in this stretch of 10 years, continuously 3 years, you can avail the ATIIC benefit. But not very few companies or units are allowed to take up the benefit. And we, the chartered accountant, need to help our clients.
Definitely.
If DPIT is now very stringent and they are not passing on the benefit intended by the government, then we are merely a spectators. So our either CA Institute has to take up separately.
Okay.
So CA Institute has to take up this issue separately with the government.
Okay.
You may even review the statistics and you review the minutes of the joint committee for the last 3-4 years. Out of 1,000 applications, 1 or 2 applications are granted. They are having a very stringent, cumbersome method. You have to take a video about your innovative approach in functioning and what is the employment opportunities. So many things are there to prove the committee that you are deserving for the benefit. But this is not the provision mentioned in the ATIIC. ATIIC is very much silent about this. So one institute, they are granting the this certificate. But if this is a stringent, that the Finance Act should express all these things. So one side they are telling ATIIC benefit is there, but nobody is able to avail it. So the very purpose of granting this benefit is not served.
Okay, I think we have to make a representation from the institute. Thank you, sir. Thank you. Definitely, we will have a representation to ensure this matter. We'll go to the next question. 30 line number 30, right? Am I audible? While attending tenders floated by PSU, is the startup enjoy concessions like not required to have minimum turnover, minimum experience. So please give notification to the issue. So it is by specified authority. It's not by. I mean, I'm saying it depends on the PSU which is going to float tenders. I mean, minimum turnover, minimum experience in years. I think we should get back on this. This is one thing I think we have to add in our future slides regarding what we'll definitely come back on this. I think. Am I audible?
Yes, sir, you are audible.
Okay. Any more questions?
Hi, sir. Can you hear me?
Yes.
Yeah. See, actually, for the MSMEs, I understand that there is some subsidy given by the Khadi Village Industries, so that board. So, may I know, can you give me some inputs regarding that?
No. What is that exactly you need? What is the? I mean, what is that exactly you want?
Okay. So, Khadi Village Industries board is giving few subsidies in case if anyone is applying for the bank loans. Who are MSMEs. So regarding that, I would like to understand. So how to apply for that? So what is the procedure?
See, Khadi Village Industries, I think, is a very rule-based authority. I mean, it's mostly about who are entrepreneurs who are engaged in Khadi.
No,
I
sir.
mean, textile.
Actually, the name is representing Khadi Village, but for all the hello, hello.
Bhargava sir, are we audible?
Yes.
Hello.
Yeah.
Yeah. Tell me, sir.
Hello, sir. Hello, sir. It is about the. Am I audible?
Yes, yes,
Yes.
please, sir.
Okay. It is about the tender floated by public sector undertaking. I would like to know whether there are any government circular notifications for having any concessions to the startups from not being able to meet minimum turnover, minimum experience in the particular field or not. Is there any government notification?
No, this in this case, these kind of things are that's why push to GM portal. But I have personally not come across anything. But if I'm sure I'll get back on this line. Definitely, it's very interesting. I'll get back on this. But that is the reason GM portal was created.
No, but there are
marketplace.
sir, but there are other portals also floated, but it is not coming to the help of MSME. I will just give you one real example. In facilitation center, that trust facilitation center, I will just tell you it is in Kerala. When the trust facilitation center pass an order, but it is not being carried out by the buyer. If the buyer defaults on a specific order passed by the facilitation council, what's the recourse the council have against the buyer of the goods? They just pass a order, but the buyer doesn't take care of it. He doesn't care about it. What is the statutory power the council have to enforce the decision passed on to the buyer?
Okay, I think this is something very new. I think we have to. I think we have to just. We will get back. I think this is one thing we can get back to on this.
Hello. Bhargava sir, is it visible?
Yes, yes. What is the procedure to apply for getting exemption certificate from IT department? Go to startupindia.gov.in. Use the ATIAC channel to get the certificate. Thus, DPIIT certificate is sufficient to claim income tax exemption for startups. No. ATIAC you have to get the benefit. So it is DPIIT and ATIAC both you get.
There was one question from Abhilash. Abhilash, can you unmute yourself, sir? It was stuck up in the middle, actually. Hello.
Hello.
Yes.
Yes, please.
Yes, sir. Hi. I'm just resuming my question. So basically, so when we are trying to approaching the bank for the subsidies, whether for the goods or whether for the services, so banks are telling
No, this
you
is
can
not
apply
okay.
through Kadi Village because Kadi Village is providing the subsidies for all the MSMEs. So that's how they said. And even I went to the website of MSMEs and verified that actually Kadi Village, that's not specifically for the Kadi Village, but so for all the subsidies, Kadi Village is giving the subsidy. I mean, so I just want to understand how to apply for that.
So you are saying how to get funds for Khadi Village Industries?
No, how to get subsidy from Kadi Village? That organization, Kadi Village is an organization from the government. So in case if we have set up from MSME, so how can I get the subsidy from that?
No, we have to look into the Khadi Village organization specifically. So we have not covered this here, but I think next time we will definitely cover this also.
Okay, sir, sure. Thank you. And one more thing, so I would like to know what are the export benefits specifically available for the MSME. So how could I know?
You can go to DGFT portal. I think it is a little export benefits are very technically complicated. How the trade happens and how the benefit comes. It has got credit scheme. It's got export guarantee scheme. It's got so many schemes. I think better to always consult a chartered accountant. Maybe whom you're consulting. That's when I'm sure it will be easier for you.
Okay, sir. Thank you.
Okay, what is the IT rate for newly startup companies established in 22-23? If it's a domestic manufacturing unit, it is 15%. Other than that, it will be 25% because less than 400 crore turnover. For IT exemption, do we need to go to Startup India website or we need to apply to IT portal? You need to go to Startup India portal, apply for DPIIT, get a ATIAC certificate. You can just that you should have DPIIT certificate. And ATIAC is for 3 years. DPIIT if you get it is for your 10 years and 7 years categories. Then same thing. Just a moment.
Last question.
Startup India exemption to be applied before incorporation or after incorporation? After incorporation. They usually recognize only LLPs and private limiteds. Any other questions?
1 minute, so we'll check it up. Any specific exemption for manufacturing startup or manufacturing for EV vehicles, sir?
EV vehicles, for the buyer it is there, but if you are manufacturing it, it is 15% is the tax rate. That's the lowest in the world.
Okay. So those were the questions, sir. And if there is any questions, they can write up to sirccp@ICAI.in and we'll share it to you, sir. When time permits, you can respond for this.
Thank you.
Those questions that was not answered or else just need some clarifications, we'll mail it to you, sir. So there are some question. 1 minute. This question get popped up. I'm just putting it on the screen.
After ATIAC, you need to apply through IT portal. No, ATIAC is also through Startup India portal only. Do IT startup doing export or should file with SDPI to prove? Depends on whether you are software technology enabled service, IT enabled or IT. No, it depends on where you're doing it. And no, it's not mandatory. STPA compliance is not mandatory.
So those were the questions, sir. And for any questions, they can write to sirc@ici.in. Many were requesting for the PPT, sir. So we can share the PPT with the audience through mail, right, sir?
Yes, yes.
I'll put it in the handouts session. And questions, if any, it can be answered. One minute, Ms. Aishwarya. There's one question, it seems. Aishwarya, you can unmute yourself, ma'am.
Hello, sir. You have mentioned that, yeah, for angel tax exemption also we need to take merchant banker certificate. Already angel tax is as per section 56. So again, why do we need merchant banker certificate for that?
See, angel tax exemption can only be given after it is valued. Correct? How can I
Yes.
get a tax exemption when only when
For
I
like,
identify the difference? Go ahead.
yeah, please continue. Sorry.
See, when I am able to identify the difference between current existing book value and fair market value, and the fair market value should be determined by the merchant, certified with the merchant bank. Unless if you don't know the difference between two, how will you get an exemption?
Okay. But angel tax exemption certificate, we are getting it directly to DPIT portal. I mean,
No, no,
startup
no.
portal. So they are giving it before
There is no
valuation also.
stop you here. There is no angel tax exemption certificate, first of all. Okay. There is only a provision which says you can get a angel tax exemption provided you have a DPIT certificate.
Yeah, there is a separate form which we fill it and then they give it a confirmation mail. So that
Correct.
if we get that mail, it means we are applicable for angel tax exemption.
Yes.
And then, which is under section 56. That
Correct.
mail is as per section 56.
Correct.
Already they have approved that we are eligible for this exemption. Then why only getting registered valuer certificate is enough? Now I need to go for merchant banker then.
See, merchant banker is for valuer. See, eligibility is different, valuation is different. That's what I'm trying to get. See, there will be 100,000 companies which are there in India. Not everybody is eligible for angel tax exemption. That's why they give you DPIT certificate. Now, after obtaining this DPIT certificate, to determine the value of the exemption, is it 1 lakh, is 5 lakh, is 10 lakh? How will you determine the value of the tax exemption? That is done by merchant banker.
Okay, okay, got
I
it. Yeah.
will see. I'll tell you how angel tax has worked out of very broad basis. I'll tell you. Total selling price, what the company is selling, is a price which is called fair value. Now you can have one fair value, I can have one value, 10 people can have 10 different fair values. But what is that value? See, if you had sold an immovable property, people today take sub-register value. If it's not an immovable property, you have let's say intellectual property. If you have some intangible asset, how do you value? How do you fix the value? That value fixed is certificate is given by the merchant banker. That is what the merchant banker certificate valuation certificate will take.
Yeah, we are also getting it from registered valuer. So will that valuation won't be counted?
No, see, that's what you understand. Income tax law speaks about valuation by a merchant banker. Companies Act speaks about valuation by registered valuer. So there are two different people.
Okay.
Income Tax Act values according to income tax rules. Companies Act valuation happens according to valuation rules. So there are two different things.
Got it. Okay, sir. Yeah, and if we don't get this exemption, if we don't get this merchant banker valuation, we have applied last year only for angel tax exemption for one of our client and also got ROC compliance is done. So now what is the remedy for if we don't get merchant banker valuation for last year?
See, merchant banker, if you don't get, let's say when you claim that exemption in your IT form, ITR6, if assessment comes, they will ask you for merchant banker certificate on what value the sale consideration is determined. If you're not able to produce it, then they will disallow it. That's what I'm saying.
Okay, understood. Okay, sir. Thank you. Got it. And so one more question, like you have also mentioned that 15% subsidy we receive under credit linked government scheme,
Correct. Yeah.
but how should we apply that? Because generally we don't receive it.
See, this is the generic opinion you are giving me. There is something called Department of Heavy Industries. Okay, if you go through them, you will get it.
Okay, so there is a separate login that we need to
Yes,
do for department of. Okay,
yes, yes.
understood. Okay, so can you please rename it Department of Heavy
So
Industries?
you are a chartered accountant.
Yes, sir.
So do not have generic opinions. No? There is always a way it is being done. It is just that the general public will have such general opinion that the governments don't do anything and stuff like that. We as chartered accountants should not think like that. And of course, when government makes some law, there will be glitches. I'm not saying no, but there will be a way out which you have to search for it.
Yeah, that's what, like, that was the question, like how we need to go if you're not able to get
So
that.
both industries and Department of Ministry of Commerce, two places where you get all the information what you want.
Okay, understood. Thank you, sir. Yeah, thank you.
Welcome.
Those were the questions it seems, so, sir. So we'll wind up the session with this. Thank you so much for your time spent here, Mr. Bhargava, sir. And on behalf of Chairman, Secretary, and Office Bearers in the absence, we thank you so much for your time spent here. And look forward to having
Thank you. Thank you all the staff also for facilitating this.
Thank you, sir. Thank you so much, sir. And we'll look forward to have you in future for physical session in SIRC on the same or different topics. Thank you, sir.
I missed your last sentence.